Hey guys, welcome to Market Mondays. Hopefully you guys had a great weekend. Before I get right into everything, I'm actually out here in California visiting family for the week of July 4th. So that's why my background looks a little weird. But there's a lot of good information that came about last week and maybe something really big to look forward this week. So before I get right into it, I'm gonna do a quick dad joke. Dad joke today is, where do bad rainbows go? Where do bad rainbows go? To prism. Get it? To prism because it's a light sentence and they have time to reflect. Get it? Pew pew. All right, so getting right into it. We actually saw an improvement of a quarter percent in rates all of last week, which is really great. Basically, in a sense, Monday we saw VA FHA rates around six and a half ish, and by the end of the week we were seeing six and a quarter, which is pretty good in one week. Usually rates move by like an eighth the percent or less, but to see a quarter percent improvement in rates in one week is really solid. We basically saw improvement upon the previous day for the entire week, which is great. Now, the only day that didn't show improvement was the day that the PCE inflation report came out. The reason why this specific inflation report is so important is because the Fed is using this as their gauge on what to do with the Fed funds rate, whether they should cut rates or keep them the same. So PCE inflation actually went up by like a 0.1%, but this was all in lines with expectations. So it wasn't anything out of the ordinary. It wasn't unexpected, nothing like that. So overall, we still saw a net of a quarter percent improvement in rates. Right now, it's still carrying over, but we're also seeing a lot of stuff improving this week. Now, one thing I want to add is that GDP, the one reason why we saw improvements in rates last week was two things: GDP, which is gross domestic product. Basically, it gets an idea of how goods are coming off the shelves, and that was down. That showed a sign of the economy slowing down. People aren't buying as much; they're holding on to their money. They're not spending money. And then jobless claims went up. So where we're seeing a lot of people still filing for unemployment benefits and continue to file for unemployment benefits, showing that weakness in our labor market. But what, in addition to that, what this week is going to come out with is all the jobs report for the week, for the month. So that's going to be a big deal because we're going to get new unemployment rates and things like that. So between the PCE inflation report and the jobs report, and how our labor market is doing. These are two things that are really driving mortgage rates right now. Also, in addition to that, it also determines whether the Fed's going to keep rates the same or cut them. So mortgage rates, obviously, and Fed rates, as I've talked about so many times, if you guys have been following, they're two different things. So we hope to see that the labor market is getting weakened. And what we'll see is that mortgage rates, if the labor market's weakening, the unemployment rate goes up, we have more jobless claims, continuing unemployment benefits being filed. We could see an additional improvement from the previous week. So if we can see another quarter percent improvement in rates after this week, that's really good. Now we basically improved by a half a percent in less than in 2 weeks. So that's what I'm really excited about. Of course, the market's closed on the 4th, but that's what I'm excited about this week. So keeping eyes peeled. I'm probably gonna be locking a lot of clients this week. So we'll see how it goes. But something to consider while you guys are out there shopping. Let clients know that rates have improved from the previous week. Maybe get updated numbers from your lender or your loan officer, and maybe wait till the end of the week and get another update. So something to consider. That's all I got. Look out.